Hello and welcome to another update video about gold. Yeah, gold did reach my target zone and got rejected as you would expect it from a target zone. So we are now in a pullback. Yeah, as I record this video, we're heading into the weekend. And I just want to let you know what I'm going to watch for next week. Quick recap here. We are dealing with a very, very messy structure, which in my opinion is still part of an overall uptrend in gold, which could still go higher and might even reach new all-time highs in 2025. However, the market has now been in a choppy sideways range market since, yeah, you'd say November. Yeah. So it's again testing our patience. Gold corrections usually take a long time and they can be very frustrating. But when gold is on the move, it can happen very quickly, especially when gold is on the move in the trend direction. Now, for now, this is all still corrective choppy action, and you can see the market is currently positioned above support for a direct move to the upside, but also below resistance, which again means we are continuing in a range market actually. So both options remain on the table. And what certainly doesn't help is that the market hasn't really given us any, well, five-wave move. All right, there is no five-wave move anywhere at the moment. So the support parameters are located between $2,580 and $2,632. And the resistance parameters are located between 2,658 and 2,726 USD. And from the, okay, what's the context? Context is that in the, you could say the primary scenario, even though probabilities are fairly balanced, but it was quite straightforward in the last few days because in both scenarios, we were watching for higher prices. I will explain that when we move in, but zoom in. You could say the primary count is a wave 4 bottomed here on the 14th of November. This was an A wave up, had a B wave down, which bottomed on the 18th of December. And we could now be on the move in a C wave to the upside, which can take us closer to 3,000 USD. But this scenario is only valid as long as the market is holding above the 19th of December low, 18th of December low at 2,600. Below that level, the yellow count will become more likely, which is still some kind of a fourth wave, which might lead to one more high. Yeah. But this fourth wave could just extend a little bit. It's a short-term bearish, but still overall potentially bullish scenario. So now let's zoom in. It's basically now about distinguishing between the yellow and the white scenarios. Yeah. And in the white scenario, we have been tracking a three-wave move up, A, B, C. I told you there are other ways of labeling this. I could even get away with calling the A wave a five-wave move. 1, 2, 3, 4, 5. But it doesn't make a great difference. The main takeaway was we added yesterday when the market was pulling back here a few days ago. I made that video and highlighted, okay, target area 2,666 to 2,689. And we would like to see in both scenarios, the short-term bullish one in white, but also in the short-term bearish one in yellow, we would like to see the market get there, probably get rejected, and then it will be the pullback afterwards, which is happening now, which is why next week could be very decisive. It is the one that should give us some clarity. Why is that? So if we're dealing with a three-wave move up, obviously the short-term bearish count and the short-term bullish count together, they don't give us clear probabilities. Because if wave 1 is an ABC, which it can be as part of a C wave, and the wave 2 in yellow is an ABC, which it can be as a correction, if that ABC plays out, again, that's why I said they move together, right? But it's now the next pullback that tells us the truth, because in this move down, if the move down is impulsive, then it's likely the yellow count, and it should lead to a break below 2,600. But in the white count, we should hold a certain support level, which I will show you now. What I will do, I will just shrink a little bit the previously larger degree support area, because we don't need the upper section. And in the resistance area, I will take out the lower box, so we don't need those. Creates a little bit more clarity and order on the chart. And for this white wave too, again, we're dealing here with possibly a short-term bullish scenario in white And as long as we're now holding, above support, which is at 2,624, this is what I'm watching for next week. Then the overall bullish expectation, directly bullish expectation, could be kept alive. That scenario. At the moment, both scenarios are valid. But white will become invalidated below 2,600, and it will become less likely below 2,624. Now, whether this is only the A wave of the wave 2, we will have to see next week. At the moment, my thesis would be that in this move to the downside, this here might only be the A wave. So what I'd like to see early next week is maybe a bounce in a B wave and then a C wave down. Obviously, if we just break this 2,624 level, the market just falls down like a stone, breaks below support. Well, see, it might be more the yellow count. And that we should get that clarity. I'm going to look for that next week. That's the update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, and if you're interested in regular updates about certain stocks like Tesla, Netflix, and so on, then check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.